Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm talking to you from New York City on this, the 15th day of August 2017. Before I talk more about today's show, let me remind you that I am the editor of Jay Taylor's Gold, Energy, and Tech Stocks, and that you can subscribe to that letter by going to miningstocks.com, or you can call our office at 718-457-1426, 718-457-1426. Also, like to encourage you to consider subscribing to Chen Lin's letter. He has had a remarkable track record over the years, and that address is chenpix.com, chenpix.com. I do want to thank each of you for listening to this show and making it one of the more popular shows in the Voice America Business Channel. Also like to encourage you to continue sending your questions, comments, criticisms, and praises along to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. Want to thank our sponsors for making the show economically viable. They are New Range Gold, RN Resources, Novo Resources, Genesis Metals Corp., Fireweed Zinc Limited, and Osprey Gold Development. I have titled today's show, The Largest Gold Discovery in Over 133 Years, ? Well, since mid-July, when Novo Resources announced the discovery of in situ gold nuggets in its Australian gold exploration project, the company's stock has been on a tear. Actually, it has been exploding like a rocket, having risen from around 65 cents on July 10th to $4.43 earlier today. I saw just before showtime it was $4.21. I have been talking about Novo Resources in this show more often than any other company because over the past several years I have seen this as the most exciting story I have ever covered. Most helpful to me in keeping me on track and owning Novo personally and in my newsletter has been the constant availability of Novo's CEO, Dr. Quinton Henning, to me. He's always been available when I've had questions. His geological theory about how so much gold was deposited at the South African Witwatersrand has led him to northwestern Australia, where it seems increasingly likely that he has found another Witwatersrand-type gold deposit. Of course, we don't know yet how much gold, what the grades and that sort of thing are, but it's looking enormously promising. And it is this remarkable story that has caused this stock to rise very dramatically. And if it is anywhere nearly as big as some of us think it might be, these shares could rise dramatically higher. At the same time, as Dr. Henning notes, this is a speculative story. Perhaps in another 3 months or so, when many more samples are collected, the beginning of a legitimate picture of the company's exciting gold project may come into focus. And in fact, I will be talking to Dr. Henning in just a few minutes from now, so I'm sure you're going to want to hear what he has to say about the fundamentals underlying this exciting discovery. Just for those of you who may not be familiar, the Witwatersrand deposit of South Africa, some 1.6 billion ounces of gold have been mined since about 133 years ago. Hence, that's the reason for the title of today's show. And as I say, Dr. Henning will be with me in just a few minutes. Alistair McLeod will be joining me in the second half of today's show to talk about what really drives the markets. Actually, it's not fundamentals, as Alistair will tell you. It has everything to do about the credit cycle, where the money is flowing. It's all about availability of money. There's a lot of psychology involved in there. Why is the equity market seemingly defying gravity forever? Well, Michael Oliver has been telling us for some time that it can't, and ultimately it will not defy gravity. I'm really glad to have Michael here today with me. Thanks for joining me, Michael.
Oh, good to be here, Jay.
Just really good. Now, we just have a few minutes, but you put out a very important piece in your weekly missive at olivermsa.com telling us why we may be on the precipice of something to the upside and perhaps considerably so in the gold market. Can you explain to our listeners?
Sure. Yeah, and by the way, olivermsa.com, there is a tab on that site to request samples. And this report we will provide as a sample to anybody who wants it. It's a weekend report, and on the first page, we're always looking at all markets from different time scales. We don't just look at daily price or anything like that. We look at momentum primarily, but we also focus on longer-term trends of momentum, which is a reflection of price. It subtract the currency out of it, so to speak. But in the case of gold, I had a chance to run a 200-week moving average oscillator. Everybody's accustomed to 200-day. It's a very popular average. Well, the same concept applies as the 200-week, but instead of looking at where that average is, we look at how is price in relation to that on an oscillator, how much above, how much below. So you have a plus side of the equation and a minus side. It oscillates. Mm-hmm. Over the last year, gold has hit various peaks, starting at 1370 in July last year. It had a secondary peak at 1350s, 1330s. There was another one on the way down in that correction to the December low of the last year. Then we popped back up this year. We've made 3 highs in the 1290s. This week, a month ago, and a month before that. But all of those peaks, if you look at them on a price chart, there's no alignment to them. There's no trend line that connects them perfectly. They're certainly not equal to each other. But when you run a 200-week moving average oscillator, each of those peaks is precisely 5% over the 200-week average. Therefore, when you plot the oscillator, I've got 7 hits on a horizontal line at 5% over, which is a shallow level. I mean, you can get 20, 30, 40% over if you want to. That is a structure that if you go through there and you go to 6% over and blow through that horizontal year-wide structure on this momentum chart, that is a big scale, time scale oscillator. 200 weeks is like a 4-year average. So we've oscillated above it 5%, 5%, 5%, 7 times now. So there is a structure there. This is why we call ourselves a momentum structural analysis. If you hit 6% over, and that is 1303.50 over the next several weeks, because the 200-week average is basically flat now, that's a breakout. So I'm saying that about $10 above the recent high, I've blown out every single high of the last year, even though price is still well below the high of last year, which is 1377. But I would get very excited if gold touches 1303.50 anytime in the next few weeks. That number will change slightly going forward. But that structure looks pregnant. It looks like it's almost destined to come out.
All right, and where might we go then, Michael, if we get through that?
I think the first thrust could take you into the 1500s.
Wow.
And by thrust, I mean something that could occur in a matter of, if you go to 1303.50, it would not shock me that you're in the 1500s within several months.
Wow, that would be music to the ears of all of us that are on the long side of the junior gold share markets, that's for sure. Well, thank you very much, Michael. We'll get you back next week and when you can talk a little bit longer about some of the other markets. I thank you so much for sharing that. That's very important information to the listeners of this show.